Hello, welcome back to my YouTube channel. In my last video, I covered the accounting entries for P2P cycle, and in my current video, I'll be covering the accounting entries for O2C cycle. I'll not be able to show all the transactions, but wherever required, I'll get into the system and show the concerned setups from where the accounting entries, the source of the account is being pulled from. So this is the typical O2C cycle wherein a sales guy creates a sales code. Based on that, a sales order is created, and then the sales order is booked, picked, packed, and then shipped. Once the sales order is shipped, it will be closed. Once you run your workflow background process, and then the AR invoice is created, revenue is recognized, AR receipt is created, and then the last step is the reconciliation with the cash management if the cash management module is being implemented. As far as the accounting entry is concerned, when you book your sales order, there is no accounting entry. When you pick, pack, and then ship, there's an accounting entry which gets generated once the shipping is done. And the accounting entries: deferred cost of goods sold account debit, inventory material valuation account, and the source of this particular account is from the inventory org parameters. So I can show this in the system. So log into your inventory vision operations, setup, organizations, bring up your inventory arc. So vision operations is my inventory arc in my current example. Put your cursor under inventory arc, click on others, inventory information. So this is where your inventory material valuation account is being pulled from. And as far as the deferred cost of goods sold is concerned, it's being pulled from the other accounts tab. So yeah, this is the deferred cost of goods account. So as long as you do not customize your SLA rules, so this is where your inventory material valuation account and deferred cost of goods sold account is being pulled from. And when you create, once your sales order is shipped and closed, and then AR invoice is created, and once the AR invoice is created, this is the general entry. Receivable account will be debited, and your revenue account is credited, and the source of the receivable account and revenue account is based on the AR auto accounting rules. So let's get into the receivables responsibility, receivables vision operations, setup, transactions, auto accounting. So let me query for the receivables type. Just say F type is receivables. And as far as the receivable is concerned, here you can see the source of each of these segments. So in my current example, I have 5 segments in my chart of accounts, and for each of the segment, this is the source. You can specify different source for a different segment. So in my current example, I have specified the source as AR transaction type for all the segments. So that means my entire receivables account code combination is generated or derived from the AR transaction type. So let me get into the any of the existing AR transaction type. So here you can see the receivable account. So in my current example, the auto accounting rule is set to derive the receivable account code combination, all the segments of the receivable account code combination from the transaction type. So that means all this will be my receivable account when I create my AR invoice. Similarly, the revenue account is also derived based on your AR auto accounting rules. In my current example, the revenue account is again set to derive all the segments from the transaction type. So if I try to create a AR invoice using this particular transaction type, this is what is the revenue account which will be used by the system. And after running of your revenue recognition and cost recognition program, your cost of goods sold account will be debited and your deferred cost of goods sold account will be credited. So the net impact of this will be your cost of goods sold account is debited and your inventory material valuation is credited. So as far as the cost of goods sold account is concerned, it's the source is based on your COGS workflow. So in most of the clients, they customize your COGS workflow to derive the cost of goods sold account. So cost of goods sold account is stored at so many different places. Like it's stored in the your inventory item level. It is stored at your sales order type, and it is also stored in a couple of other places like your inventory or parameters. So you can customize your COGS workflow to derive each segment from a different place or the entire account code combination from a particular place. And as for the deferred cost of goods sold account is concerned, it's being picked from your inventory org parameters. And now coming to the receipts. If you try to create a receipt with the remittance method, then the first accounting entry when you try to create your receipt will be your receipt confirmation account will be debited and your unidentified receipt account is credited. These accounts are being derived from the receipt class which is used in your AR receipt. So let me just get into system and query for any of the existing receipt class setup. Receipts, receipt classes. So this is the receipt with remittance. So let me just query for any receipt class with the remittance. So it will be standard remittance. So I'm just picking up some receipt class. So receipt confirmation account is being pulled up from this receipt class. Unidentified receipt. So in this example, this is what is the unidentified receipt which system will use if you try to create a receipt using this particular receipt class. And then once you enter your customer details, the balance moves from unidentified receipt to unapplied receipt. So the journal entry will be unidentified receipt will be debited and your unapplied receipt account will be credited. Again, this unapplied and unidentified receipt are being pulled from your receipt class, unapplied receipt and unidentified receipt. And once you enter your transaction number, the balance again moves from your unapplied receipt to your receivable account. So the generator will be unapplied receipt account debit, your receivable account gets credited. So receivable account is derived from your invoice against which this receipt is created. So the net impact of this is receipt confirmation account is debit and your receivable account credit, and all these accounts get nullified. And when you perform your your payment reconciliation or your receipt reconciliation via cash management, your cash or bank account will be debited and your receipt confirmation account gets credited. So I should say receipt confirmation, receipt reconciliation via cash management. And let us assume you try to create a receipt with a no remittance and clearance method of direct. So no remittance, maybe query for any of the existing receipt class with no remittance. Maybe this is a bad example. Let me pick up something else. Anyways, I'm not able to get any exact example, but anyways, like as far as the receipt with no remittance and clearance method of direct is concerned, when you create your AR receipt, your cash account will be debited and your unidentified receipt account will be credited. Again, the cash account is being pulled from here, unidentified receipt is being pulled from here. Similarly, again, unidentified receipt will be debited, unapplied receipt will be credited, and then unapplied receipt will be debited and your receivable account will be credited. So the net impact of this particular journal entry is cash account debit, your receivable account. Even in this example, the net accounting entry is cash account debit, your receivable account credit. So there is no difference in the accounting entry whether you use your receipt with remittance or receipt with no remittance, as far as the net impact of the accounting entry is concerned. Yeah. And now coming back to the different kind of AR receipt, we have already seen the normal invoice, and now as far as the AR credit memo is concerned, your journal entry will be revenue account debit, receivable account is credit. If the profile option AR use invoice accounting for credit memo is set to yes, then system uses the accounts from the original invoice. So from the original invoice, whatever the receivable account which is debited will be credited here, and whatever the revenue account which was credited when the original invoice is created will be debited here. If this particular profile option is set to no, then system will derive this receivable account or revenue account based on your AR auto accounting rules. And for AR debit memo, receivable account is debit and revenue account is credit. Again, these account code combinations are being derived based on your AR auto accounting rules. And the next invoice step is about the AR chargeback. When you create your AR chargeback, your receivable account will be debited and your chargeback clearing account is credited. Receivable account is being derived from your AR auto accounting rules, and your chargeback clearing account is being derived from your chargeback receivable account. So whenever you create your chargeback invoice, you select chargeback receivable account activity, and then chargeback clearing account will be debited and your receivable account will be credited. So as far as this particular receivable account is concerned, it will be the receivable account of the invoice against which the chargeback invoice is created. So as you know, like chargeback invoice is created to close the debit item of the existing invoice. So this particular receivable account is being derived from that particular invoice against which this chargeback invoice is created. So the debit item or the receivable account of the existing invoice is credited, and the new receivable account gets debited. And as far as the commitment is concerned, deposit and guarantee, these two are called commitment transactions in AR. So as far as the AR deposit is concerned, your receivable deposit account will be debited and your offset account gets credited. So receivable account is being derived based on your AR out accounting rules, and offset account is being derived based on this particular profile option. Use the AR deposit offset account source profile option to determine how receivables derives the offset account to credit for this deposit. If this particular profile option value is set to derive it from the transaction type, the offset account is derived from the transaction type. But if it is set to derive from, say, auto accounting, the offset account is being derived from the auto accounting or some other source. So let me just pull up one deposit transaction type, and then I can show the offset account. F11, pick up one deposit transaction type. So as soon as you select the transaction class as deposit, this type gets enabled, and here you can see the offset account. So your receivable account gets debited and your offset account, whatever is mentioned here, gets credited. If the profile option AR deposit offset account profile option is set to derive this particular value from the transaction type. And of course, as far as the deposit is concerned, the name itself says that you have received something from the customer. So you create your AR receipt against the deposit transaction. So when you create that particular AR receipt, the journal entry is cash or bank account debit, and your receivable deposit account gets credit. So the net impact is cash account debit, offset account credit. And when you apply this particular deposit against any AR invoice, this offset account, whatever you are crediting here, will be debited, and the receivable account, whatever is used in the original invoice against which a deposit is being applied, will be credited. So again, if you look at the total net impact of the original invoice as well as the AR deposit, the journal entries, your cash or bank account debit, your receivable account credit. Guarantee. So as far as the guarantee is concerned, the journal entries unbilled receivable account debit and under revenue account credit. Again, this is based on your AR auto accounting rules. So I can just show you that. Auto accounting. So here you can see unbilled receivable account. So here you have an option to go for a source of transaction type or standard lines or site, which is customer side or sales representative, or even you can enter your constant values. Unbilled receivable, similarly unearned revenue. Even for unearned revenue, more or less you have the same source. So when you create your guarantee transaction, your unbilled receivable will be debited, unearned revenue is credited. And when you enter an invoice against this particular guarantee, this entry, whatever is being created, gets reversed. That is, your unearned revenue account is debited and unbilled receivable account is created. So remember, as far as the guarantee is concerned, we are it's only just a kind of a surety or guarantee from the customer. We are not physically receiving any cash. That's the reason why no cash account is being involved in this particular transaction. And the last one is with regard to AR invoicing rules. So as far as the AR invoicing rules are concerned, I had already created a video on the AR invoicing and accounting rules. You can refer that video on my YouTube channel, which has the entire flow as well as the accounting entries related to AR invoicing rules. Thank you. Thanks for watching my video. For interesting videos on Oracle Financials, please do subscribe to my channel. Thank you.